Welcome back to this Money Control live stream. You're watching Closing Bell with me, Nandita, Khemka. It turned out to be a fantastic Friday, although we didn't really start on a good note. But a solid recovery coming in from the day's low. In fact, the Nifty made a swing low of 24,664 or thereabouts, and we ended around that 24,854 mark. So almost a 200-point recovery coming in from the day's low. Even the Sensex, 81,220 is where we are at. So good recovery and a 200-point bump up on the Sensex. But mind you, from the days of from the lows of the day, we saw a near 1,000-point recovery on the Sensex. The Midcap index also staged a very good recovery, so 0.5% uptick there as well. So all in all, a good day coming in after yesterday's sharp fall. We saw the Nifty auto triggering that sharp fall across the markets yesterday, but today. Across the board, the buying coming in at lows, and the Nifty bank index, so that was among the top sectoral gainers. So a 1.5% uptick coming in on the Nifty bank index, mind you, has reclaimed that 52,000 mark as well. We saw Axis Bank, of course, among the top Nifty gainers today. And if you look at the breadth, the advanced decline ratio, even Stevens, but towards the end of the session, it actually tilted towards losers. But more, throughout the day, it was in favor of the gainers. Sectorally, metals and banks, these were the pockets that led from the front. Metals, I want to mention, China GDP figures came out today, tad above expectations, which is why metals saw good buying interest today. Autos also, after yesterday's 3.5% fall, saw a mild rebound, 0.5% uptick coming in on the auto index as well. IT and FMCG, these were the two pockets that were the drags. Of course, Infosys, LTI Mindtree, these are some of the stocks that saw some bit of reaction to its earnings. Dragged the IT index down. But if you talk about the positive contributors on the index, on Nifty, in terms of the positive contributors, you had 3 out of the 5 top contributors came in from the banking lot. So ICICI Bank, Axis Bank, and HDFC Bank ahead of numbers. These are the 3 top contributors from the Nifty bank, from the bank index rather, on the Nifty 50. Aside of that, you had Reliance lending support to the index, and Tata Motors, which by the way has been an underperformer, but today we saw good traction coming in on Tata Motors as well. Among the Nifty gainers, Axis Bank, 5.5% uptick on this particular stock on the back of its earnings. You had Wipro, better than expected numbers, but guidance was a tad bit disappointing. But nevertheless, the stock was among the top Nifty gainers today. Eicher Motors, Shriram Finance, Shriram Finance will be considering a stock split on the 25th of October. On the back of that news flow, the stock was gaining traction. Hindalco was the other one that was on the gaining end. Among the losers, Infosys, pre-positioning or no positive surprises in the second quarter earnings. Most of the positives were largely baked in. That's what analysts have to say, which is why Infosys saw, sharp cuts today, almost 4.5% downtick coming in on Infosys. Asian Paints was the other one, and other consumption names like Britannia, Nestle, HUL, Titan, these were some of the other laggards. Quickly want to take you through the, gainers and losers from the broader end of the markets as well. Motilal Oswal, that stock was up 11%. Mazgaon Dock to consider stock split on the back of that news flow. That stock was among the top Nifty 500 gainers. Tejas Networks and DOMS were some of the other movers. On the flip side, Manappuram Finance on the back of RBI ban on its arm, Ashirwad, that stock was down 15% or thereabouts. Elecon Engineering, city gas distribution stocks like IGL and MGL, on the back of news flow, these stocks were also, witnessing intense selling pressure. Aside of that, you had LTI Mindtree and Zomato. These were the other losers. But we have with us Milan Vaishnav of ChartWizard this afternoon joining in to take stock of where the markets are headed from here, how the chart setup is looking like, and what the next few weeks are looking like for the markets. Great to have you on the show, Milan. Swing low of 24,664. Would you call it a bottom for the time being?
Hi Nandita, well, good afternoon. I have a mixed set of reactions to the today's price action. Number one, we need to take a look at the things in a bit of a larger perspective. The first is that we went almost near the 100 DMA today, which is placed at around 24,507. So let's round it off to 24,500. So that's where we went almost there. And secondly, we also ended up testing the 20-week moving average on the weekly charts. I will refer to the weekly charts because we are ending the week today, and it's the second consecutive week that we have seen the market consolidating after a decline just 2 weeks before that. So I feel that what we have done so far is that we have mildly retraced from and levels that were extremely deviated from their mean. And if you are reading the technicals in isolation, all we have seen is just a retracement, and the primary trend as of now still remains intact. Now, that is one part of the story. Now, what I feel is that we cannot outrightly call this a bottom because um, we still remain a bit overextended on the weekly charts, and some kind of ranged consolidation cannot be ruled out. That is part two of the story. Now, the part three, and the important part is that we will need to keep a very strong eye on 24,500, which is the 100 DMA level, because if we are seeing a close below that, then we can fairly say that there is some disruption in the primary uptrend. So now what I see that over the coming days, we will see the markets oscillating in 600 odd points, with 25,000, 25,100 is a place where there is maximum accumulation of the call eye for the 24th October as well as the monthly expiry. And therefore the resistances have been dragged lower. And on the lower side, we have 24,500, which is seen a very large predominant writing of puts. So this is where I see the markets ranged between 24,500 and 25,000, 25,100 on the upsides. And until and unless either of these two levels are violated, we are less likely to see any trending move. A violation of 24,500 might bring in some issue for us.
All right, violation of 24,500 could spell some more trouble, but 24,500 crucial level to watch out for. But banks, they were the outperformers this week. Financials, the Nifty Bank Index is up 2% for the week, even though the benchmark indices have clocked in a third straight week of losses. We saw what Axis Bank had done in its quarterly earnings. A lot of brokerages have maintained their buy call on the stock, even though Axis Bank has underperformed, if you compare it with an ICICI Bank. Just quickly want to take you through what some of the brokerages are saying on Axis Bank. Nomura has a buy call. Target price is at 1380, and they've noted that the second quarter earnings were steady because expectations were largely muted. Loan and deposit growth were soft on a quarter-on-quarter basis, but that was largely expected. Also, the fact that one-off tax gains were used to shore up provision buffers. These are some of the factors that played out in the second quarter. And Nomura has also pointed out that the risk reward at 1.6 times FY26 book value per share for return on equity of 15 to 16% is something which is attractive. The risk reward is rather favorable. And of course, we have HDFC Bank also that will be reporting numbers. Last 2-3 sessions, we've seen HDFC Bank actually come up and provide some support to the index. Quickly taking you through the estimates, NII or net interest income is seen up 11.5%. Profit is expected to grow somewhere around 4%. Margins are likely to remain stable. Loans are projected to grow by almost 8%, while deposit growth could be somewhere, could grow somewhere around 14% or thereabouts. Comments on deposit accretion, credit growth, margins, these are some of the factors that will be watched out for. But looking at the way the banking earnings have, kick-started, or the way Axis has kick-started the banking earnings, we've seen a very good uptick coming in on Axis, HDFC Bank also starting to perform. So, do you expect these two stocks to take the lead here on when it comes to the banking pack? Because ICICI Bank has been one stock that has outperformed within the pack.
See, the thing is that, Nandita, if you take the top 4 or 5 stocks, that is ICICI, Axis, SDFC, Kotak, they make up to almost 70% of the Bank Nifty index. But the interesting thing here is that all the 3 stocks, let me stick or rather stay put with the first 3, that is HDFC Bank, Axis Bank and ICICI, they are very much different with their respective technical structures. Axis Bank has rebounded off its 200 DMA on the weekly time frame. The uptrend remains intact. It bounced off from from the 50 DMA. So it's in continued uptrend. We can say that ICICI Bank is much better placed from a technical perspective as compared to Axis Bank, and above all, on top of it all, SDFC Bank, if it is able to move past 1790 levels, then it's likely to lead to a multi-year structural breakout in SDFC Bank. So my preference would be if I have to select in order of preference, then I would like to go for SDFC Bank, ICICI Bank, and then Axis in this order. But yes, all three of them remain strong,
Okay.
and they are likely to remain strong over the coming months.
All right, point taken. Let's shift focus to the IT pack then. Divergent moves coming in on some of these stocks, IT stocks, but the index was dragged down by what happened with Infosys. No positive surprises. Guidance revision was expected by the street, so that has also played out. Most of the analysts say that in the last 3 months we've seen some of these stocks rally quite a bit, right? The likes of Infosys, in fact, has gained in excess of 30% already in the last 3 months. Just want to take you through what some of the brokerages are saying about these IT stocks. Buy call, that's the verdict from Nomura, target price at 2,130. So some brokerages are expecting the stock to cross that 2,000 mark once again. Margin was in line with estimates. No fireworks there, but third quarter could be a little weak in terms of margins as salary hikes will be rolled out. But brokerages have also pointed out that Project Maximus, will kind of cushion the impact of that. Aside of that, if you look at Morgan Stanley, they also have an overweight rating, target price once again in excess of 2,100 rupees or thereabouts. On the other hand, you had Wipro, where expectations were very muted, but it returned to revenue growth after 6 quarters of decline. So that's one big positive for Wipro, of course, reacting to earnings today as well. But Wipro has been an underperformer if you look at the other IT stocks over the last 3 months. So for Infosys, do you think much of the up move has played out on the charts? How is it poised? And Wipro, do you think this is the start of a long-term up move?
Again, let me take a larger look here. First of all, if we take a technical look at Nifty IT index, it is just taking some breather and it's moving in a sideways trajectory over the last couple of days. It might be up and down 1% here or there, but largely it is showing some slowdown in its overall relative momentum against the broader markets. Now, what I see within the IT pack is that leadership within the components is changing heads. When we talk about performance, outperformance or underperformance of the IT space, one would by default look at TCS and Infosys. But I feel that within this IT space, there is some rotation in the components going on where some weight on couple of leading components like TCS and Infosys are being paired, and they are moving towards stocks like HCL Tech, Wipro, Tech Mahindra, and such this stuff. So coming to Infosys, I believe that Infosys has slipped again inside the trading range, and we will see some trading up move only if Infosys is able to go above 1900 levels. So long as Infosys is below 1900 levels, I am less hopeful of any trending move taking place here. The stock might just plainly consolidate in a defined range. Wipro is showing some stronger signs of an impending breakout, which has not yet occurred. But however, it will need to move past 555 levels to start moving higher with some good strength. We have certain technical indicators playing out in this favor. We have plus DI crossing above minus DI, but the strength in the trend is still missing because of the consolidation. So above 555, we can certainly expect a good trending move in Wipro. Infosys, so long as it is below 1900, expect it to stay within a defined range.
But let me also highlight the auto pack, because that has been the biggest sectoral laggard for the week, and even Bajaj Auto has been among the biggest losers for the week. I think it has shaved off somewhere around 16% or thereabouts for the week. What would you do with the Bajaj Auto now? Is there more downside? Because if you look at the target set out on the street, they range from 7,800 to 13,600 on the upside. What are your thoughts? Which way is the stock headed after this massive sell-off that it has seen this week?
The thing is that, Nandita, the stock has given up almost 50% of the insane move that it had seen over the past weeks, and it has closed below its 100 DMA as well. So as of now, I believe that, how do I put it in a simpler words? But I see that upsides now in Bajaj Auto will stay capped so long as it is below 11,000 levels. So I think with each rise, we will need to act in a way that we protect our profits on whatever longs we have. But taking fresh exposures in Bajaj Auto at this point in time is something I would like to avoid. We'll find much better opportunities elsewhere.
All right. Another pocket that has been in news for the last 2 days is the city gas distribution firms, right? The likes of IGL, MGL, Gujarat Gas. Because, APM gas allocation has been cut by around 20% for the CNG segment by the government. And, lower gas allocations are likely to hit profitability for these firms. In fact, most of these companies are in talks with key stakeholders to minimize the impact. But brokerages are, of course, seeing this as a big negative, and it would hurt profitability as well for some of these companies. Now APM gas shortfall has to be covered by spot or short term LNG. That's what Jefferies has written in its note. They've said that these companies will be forced to defend their margins at the expense of volume growth. So a price hike of 6 to 7% will be required for margin neutrality, and the impact of volumes, volumes are likely to be hit pretty badly, and the sector could be up for a derating as well. ICICI Securities also says that a price hike of 4.4 to a little over 6 rupees per kg will be needed, and if there is no price hike, there could be sharp EPS impact on some of these shares. For IGL, it could be as high as 32%, and for MGL, it could be 20%, and for Gujarat Gas, it could be 24%. But assembly elections, the upcoming elections could limit the ability of these companies to take any meaningful price hikes. But after the kind of moves that these stocks have seen, would you call this, an opportunity to just get out of these stocks? Because these stocks have seen a good run if you look at the monthly and 3-month charts.
No, in a way, Nandita, because see, these are short-term fundamental. These are short-term jugs that are that are here because of some fundamental developments, I will call it. But given the kind of run-up they had over the past months, one may consider booking profits in your portfolio if you are a short to medium-term momentum investor. But however, if you are just building your, or rather holding on to your long-term equity portfolio, I don't see any structural damage that has happened on these stocks, whether it's MGL, IGL, or Gujarat Gas, they have just retraced back to their support levels. So I believe that their overall uptrend continues to remain intact. Long-term investors may in fact utilize these levels to enter into the stock in small quantities, and buy more once a short-term base is confirmed, which has not happened as yet. But yes, I don't see any reason to panic and jump off these stocks as of now.
Okay, that's about the city gas distribution stocks. But one last stock on my list is Manappuram Finance. Saw a knee-jerk reaction of 13% today. Of course, RBI has banned one of its arm, Ashirvad, from sanctioning and disbursing loans. This has come as a major setback, and we, if you hear or the dealing room chatter is the fact that aggressive delivery-based selling was seen at FI desk today when it comes to Manappuram. And CLSA says that Ashirvad actually forms 25% of Manappuram's overall AUM, and that would seriously impact earnings as well for Manappuram. And CLSA has cut Ashirvad's profitability estimates and its target multiple in Manappuram's valuation multiple. Morgan Stanley has downgraded the stock to equal weight. Target price has been cut to 170. And RBI's embargo on new business by Ashirvad could hurt profit growth going forward. In fact, consolidated earnings forecast has been cut by 20% for FY25, and for FY26 to FY27, the cut has been 30% in terms of earnings forecast. But valuations are still cheap, but investor interest could take long to return. That's what the brokerage has maintained. Even Jefferies has downgraded the stock. But do you see a major breakdown on the charts now for Manappuram? And if yes, what is the next support to really watch out for here?
I think, Nandita, that whatever maximum damage that one could have imagined in the immediate short term has already been inflicted on the stock, because If you look at a daily time frame, it trades very deeply oversold. There's no doubt about that. However, if we take a little long-term view on the stock, then it has just ended up testing its 200 DMA and has rebounded a bit from there. So I'm not saying that we might see an immediate rebound in the stock. The levels that we saw of around 225 to 30 rupees a couple of weeks ago may take very long to reach to those levels. But I also see that some technical rebound cannot be ruled out. So as of now, I think we can certainly expect some technical rebound. We can expect the stock to test around 165, 70 odd levels over the coming days, and then attempt to form a base or may even further break down. That is something only the time will tell going ahead from here. But even if the downtrend in the stock continues, some amount of technical pullback can be expected, and that's where one can take a review whether to stay put with the investment or should we be using that move to move out of the stock.
Okay, that's the view on Manappuram. But before I let you go, Milan, any recommendations for the coming week?
Not really, but I'm looking at SDFC Life, Nandita. That is one stock that I'm looking at. One can consider entering into SDFC Life at 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 around the levels of 740. I mean, somewhere I think it closed at the same level. And while maintaining a stop loss of 728 on the stock, one can expect 770 to 775 on it. That's just one stock that I'm looking at for the coming week.
All right, HDFC Life, top recommendations coming in from Milan. With that, Milan, would like to thank you for taking out time this afternoon and joining in and sharing your thoughts with us. Look forward to interacting again. Have a great weekend and I'll see you soon.
You as well. Many thanks.
Well, on that note, we've come to the end of this edition of Closing Bell. We have, ended the week with losses. It's the third straight week of losses. The longest weekly losing streak for 2024. But, the good news is that we managed to pare some of those losses and, we staged a very good recovery from day's lows today. So, a 200-point recovery coming in on the Nifty, which is a good thing. Let's see, or let's hope that next week turns out to be much better as we have a lot of earnings to digest, in the coming week. But for now, it's a goodbye from me. Thanks a lot for tuning in. Stay tuned to Money Control for all your other news and updates and have a great weekend.